Welcome to That Annuity Show, the podcast that will make you an expert in explaining annuities to your clients. Give us 30 minutes each week and we'll shave hours from your client presentations. Now, here's your host, Paul Tyler.
Hi, this is Paul Tyler, and welcome to another episode of That Annuity Show. Ramsey, how are you?
Always good to be here.
Okay, well, we have a really interesting episode that's going to cross a number of interests. And, you know, Ramsey, you've been very well steeped in the long-term care environment. You know, on another side of our business, we've been focused on Medicare, Med Advantage, Med Sup, and today we have a special co-host, Laura Diane-Haber, who runs our innovation program at NASA. And we really haven't talked much about this, Laura. You and I do another podcast specifically on innovation in the insurance space. Do you want to just give a quick back intro in terms of what you do and maybe just kind of set up talk about the event we held a couple weeks ago in Hartford, Connecticut?
Yeah, absolutely. Thanks so much, Paul. It's great to be back on Taz here. It's been a while. Ramsey, fabulous to see you as always. Innovation Program Manager for NASA Reimagine. So within NASA Financial Group, we have a InsurTech and RetireTech incubator. I am the proud program manager, kind of working through and creating happy collisions, if you will, giving people the opportunity to share their stories, connecting them with the individuals not only within Hartford, Connecticut, but the larger New England market and across the world as well. On June 22nd, we hosted what we called the RetireTech Forum in our office within Hartford, and over 100 individuals paid us a visit, both virtually and in person, for 6 panels, and over 22, we like to think of thought leaders and change makers, not only with the insurance space, but the retirement space as well. So really focusing in on, retirement insurance and how that mashup takes place. And we called that RetireTech. And Tom was with us there that afternoon along with his COO. So it was a really exciting day for us. And I'm happy to be here today to dive deeper into the conversation.
Yeah, no, it was great. And Laura, just to kind of back up a little bit, I think we had a lot of former guests of That Annuity Show, either in the audience or on panels or leading panel discussions. I mean, I would say, I think we had maybe 20 people who've been on the show at least.
Yeah, at least 20 people across Taz and Reimagine podcast. I actually snapped a picture that I'll throw up on social media later on today, but it was amazing to see the hands raised in the crowd as we grow multiple communities. But that annuity show community is definitely something that we like to see flourish out there. Yeah,
well, today's show is a result of one of those happy collisions. Tom Beauregard, who is the founder and CEO of HCG Secure, is on with us. And, Tom, welcome.
Thank you. It's great to be here. Great to see everybody again.
Yeah. Well, Tom, can you just, before we sort of dive in, can you tell us what is HCG Secure? What do you do?
Sure.
And what problem are you trying to solve here?
Yeah, I would say our focus is we are a development company creating insurance products that are focused on a middle-income population that is retiring without long-term care. I mean, that would be sort of in a sentence how I would describe the work that we're doing. The specific kind of broad problem that we're addressing is that middle-income retirees come into retirement without really thinking about long-term care. There's a misperception amongst a large percentage of people that Medicare somehow covers long-term care expenses. 70% of us will need long-term care before the end of our lives, and it really bankrupts people late in life, this issue, and it also creates kind of chaos for families as folks in their 80s who suddenly find themselves in a position where they don't have savings left. They've gone through the spend down process. They need support with activities of daily living, and their adult children have to step in, and that kind of disrupts their lives and their retirement savings. So that's very broadly the market that we're focused on.
Yeah, and tell us maybe tell us a little bit about your background. How did you get to the space?
Yeah, I mean, kind of two parts to this. I was prior to founding HCG, I was the Chief Innovation Officer at United Health Group, And I held that position for about 15 years. And basically, I ran research and development for both the insurance side of the house, United Healthcare, but also the care services side of the house, Optum. From a professional perspective, I left United with this model in mind, just because my team did get involved with some of the long-term care insurers as they were moving into sort of insolvency. And without getting overly detailed, we were basically trying to intervene, help the policyholder who had an insurance policy from a long-term care insurer with home assessments and help with home modifications. And the short story is we were unable to engage, because what we learned through that process was the people that had been pre-funding long-term care policies were, frankly, not willing to engage with the insurer. They were worried that it somehow had something to do with underwriting or the stability of their policy. On a personal level, my parents both went through a decline late in life, and I was thinking I'd be able to sort this out as someone who really knew the insurance markets. And frankly, it was chaos, understanding what Medicare pays for, what it doesn't, trying to make transition plans for my parents without objective support was really, really difficult. So when I came out of United, I started to fixate on this space and really the problem for middle income families. I mean, wealthy people can either self-fund or they have long-term care, and very low income people, Medicaid covers long-term care services. So it's that large population in the middle that needs support with new insurance solutions and frankly, navigation.
So, Tom, I had a question. When is pardon me? When is an appropriate time for folks to start thinking about this? Like, at what age can somebody sort of economically buy one of your policies and have something that is sort of that will work economically versus their retirement?
Yeah, I would say so. The obvious answer is that it's all entry age pricing, right? So both of our products, and we've got two products in 48 states. One is called Home Care Secure. One is called Home Life Secure. People can buy as early as 18. I have absolutely no expectation that we're going to see young folks thinking about long-term care. I think what we're seeing is people are starting to buy in their 50s. They're contemplating insurance or they're contemplating retirement. They might have had an experience or be going through an experience with their own parent where they're understanding how expensive this is, what's covered, what's not covered. So I think reasonably what we can expect is that people between the ages of 50 and 70 are kind of the prime buyers for products like this.
Yeah, well, the demand has been enormous for long-term care. It has been forever. It's just what's the price?
Yeah,
and what happens to that price over a period of time. Same thing with Medicare. Everybody's got to get it. A lot of decisions around, well, what do I get? What's included? What's extra? What's free? And how long is it free? Is this like an entirely new category product? Do you have any direct competitors in this space?
It is a new category. I mean, there are hybrid products that sit above these products that they're more expensive. They're medically underwritten. I mean, just to be specific, we're offering coverage up to $150,000, which is going to give someone a reasonable level of insurance, whether it's for at-home care or even for a short-time institutional. None of these products are medically underwritten, so we're targeting 90% acceptance rates, and that's what we're seeing. So if you think about sort of the long-term care market, traditional products or hybrid products, they're medically underwritten, they're much more expensive, and they tend to have higher rejection rates, 30 to 35%, because they're medically underwritten. So really what we're targeting are products that are adequate, have very high acceptance rates, and are much lower cost for that middle income population. And then the other sort of important element is that we're integrating a support model for the family. So long before they might need the insurance, we're offering people help with things like advanced care plans, with wills. It's really the percentage of people that don't have wills in this middle income class is really high. That creates havoc for families later in life. We're offering support in the care coordination with counselors. So we've we basically surrounded these insurance products with support services for the family.
So, Tom, how do you work to engage potential customers? You talked about, previously you dealt with being unable to engage, dealing with chaos when finding support, when going through your own personal journey. How are you working to engage potential customers?
It's a great
for the
question,
products?
and I don't have data, Laura, that would suggest that we can. So just to be really clear, when someone buys a Home Life Secure policy or Home Care Secure policy, as part of the fulfillment package, we're going out and telling people what they have access to. You can do this annual assessment with us. You can take advantage of our care coordinators. We can help you with a will. So we're communicating with members. We're still early on, so I can't tell you that we are engaging. And that's one of the hardest parts of sort of any insurance model. But my hope is when we're doing this outreach early in someone's retirement, someone who's 65, has just bought this policy, they're healthy, will stand a better chance. And I will also say, just from a marketing standpoint, the surrounding service models are helping. Brokers like it, consumers like it, so they understand the value proposition.
So are you selling direct to consumer? Are you selling through agents? Or are you selling through partners like AARP?
We are selling through a large network of agents. So we've got like Amwins is the largest wholesale broker in the country, is selling this to affinity groups. They're out there selling it to retiree groups. We have an entity like LTCI Partners. They're the largest seller of long-term care in the country. We've got about a dozen national, very different. Some are employer platforms, some are direct to consumer, but our primary distribution right now is through these very large brokerage entities. We do have the capability to sell direct to consumer. So it's affinity groups, it's employers, it's individuals, but right now it's all through these large broker channels.
Yeah, and I can see the value here. I mean, just a few weeks ago, we went through and my husband's grandfather passed away, and we're the, power of attorney. So we're working through the documents, working through all of the things you had mentioned earlier in the introduction. And if someone handed me this piece of paper or this QR code or this website as we're exiting the funeral home, having to set all this stuff up, it would be like, yep, the value is here. Absolutely. We're going to insure everyone around us so we don't need to go through this again.
It creates chaos for families, and the other thing that happens, and this is much more at a sort of an emotional level, but people don't talk about sort of end of life plans with their adult children, and adult children don't know sort of what their parents' financial circumstances are until it's too late, until they're spent down, they need functional support, and then these kids who are in their 50s and 60s need to step in. We just did a survey with an outside foundation that came in. Not-for-profit that's focused on the elder care space. And they went to 400 consumers who are in this middle income category. And the results were stunning, just how little people know about sort of the risk of long-term care, the expense of long-term care, what Medicare covers, what it doesn't cover. Of the 400 people that were surveyed, about 100 had a caregiver experience. So we were able to segment a little bit. And people that had a caregiver experience, very different, right? They understood that it's expensive, that it's not covered, that documentation and having plans in place are critical. So really kind of interesting results.
And one real basic question, I can imagine the answer could be any of the above. Is this a life insurance policy? Is this an annuity, or is it a health insurance policy?
So Home Care Secure is an indemnity policy. It's a use it or lose it, low cost, no medical underwriting, indemnity policy. Home Life Secure is a whole life policy. It's a hybrid with accelerated benefits. And that's, we went through the interstate compact on that. We have coverage in 48 states. We only launched Home Life Secure about a month ago. So they're two different products. And the whole idea is, and we have others in development, the whole idea is to have products in a portfolio that match this population, that all have the same set of sort of family support services that meet different needs. So if someone wants a really low cost, use it or lose it indemnity policy, they buy Home Care Secure. If they want a policy that has a guaranteed payout of life insurance, they buy Home Life Secure. You could build, and you guys know this, a model off an annuity with accelerated benefits. So there's a variety of different product ideas in this space. We have 2 in market right now.
So you have an important services component. So there's the financial component, there's a services component. How have you gone about building that out? So we talked a little bit about your distribution channel, but all those things that you're bringing to bear, that's a lot. There's a lot there. There's a lot to provide. How are you finding vendors or partners to provide the services?
Yeah, it's a great question. I mean, really what we thought about, and a lot of this is personal experience. It's analogous to what Laura was touching on. It's if you've had a personal experience in this area, you sort of understand sort of all the weak spots. So we have picked categories that we think are important. Things like care coordination and benefit advocacy, helping people understand what does Medicare cover, what doesn't it cover. If you need to make a transition, how do you help a family with that transition based on the condition of their loved one? So in that category, we go through a vetting process by category, and we create strategic partnerships. So in that specific category, we're working with Wealthy. And Wealthy has great content in this space. They have care coordinators who are masters in social work with a focus on elder care to help families make objective decisions. Another category, and I won't touch on all of them. We've got about 8 strategic partners to answer your question, but in the whole area of documentation and advanced care plans and wills, we're working with a company called Trust and Will that will come in and help middle-income people, in really simple ways, pull a will together, pull an advanced care plan together, pull a simple estate plan together if they're at that level. We work with an organization called ELIQ, which is basically helping people with social isolation with an AI device. And so it's we have, again, about half a dozen of these that cover what we consider to be kind of the full spectrum. We're always looking and thinking about sort of other problem spots that we can, fill and support families with. But right now we've got kind of a suite of strategic partners that provide these services to our insured members.
Yeah, if you could only here's two sides to the question. One is, if you look through the services that you're providing, I realize you're sort of just kind of beginning the journey. You could only offer one of the services you offer. Which would it be?
Great question.
And also, I think if you look through those services, what didn't make it on the list? Right? You would have thought would have made it on there, but you didn't. It was too complicated, too expensive.
Yeah, those are great questions. I would say that it's the moment of crisis that's hardest for families. So if I had to pick a single sort of strategic partner, it would be Wealthy, right? It's that organization that can come in and say, geez, we don't know what to do. Dad seems to be showing sort of cognitive decline. Mom has pulmonary disease. We'd love to keep them in their home. Somebody that can really help you in a deep way assess what's happening and then offer really great objective advice on how someone can continue to age at home or can't, frankly. So if I were going to pick one partner, it's that moment of crisis support that I think is most important. I think that the categories that we've kind of avoided are things that you see in a lot of just basic association plans that, you can make money on, but they're not, discounts on things like dental and vision. So what we've really been fixated on is, how do you give someone support with the elder care experience? How do you give a family support throughout the course of their retirement? And we've stayed away from sort of a lot of what you typically see in association plans, the basic discount programs that aren't focused on elder care issues.
Now, you mentioned ELIQ, the AI device that helps with the social isolation. When you were researching, in your previous role, and then obviously as you're working with your products now, how much of that social isolation do you think plays a role in the whole experience of aging, whether it's for the individual or the family that's surrounding
people are,
them?
Even before COVID, it's been a massive issue. But people who are living at home, maybe widowed, maybe not. I mean, as soon as someone retires, they start to get isolated, right? And I'm not suggesting that a 65-year-old who's really active needs an AI device. But the process starts as soon as someone retires. So the idea of interventions in this space, and it's really amazing. If you look at Eloque, they've done a lot of trial work. And again, we vetted all of these partners very, very carefully. The level of engagement for people is stunning. That AI is amazing in that it learns how to communicate over time with an individual. Do they like jokes? Are they? It's just hysterical to watch sort of the trial work that they've done and the level of engagement that they drive, and also their ability to measure sort of how isolation declines, even though it's a robot. It makes it a huge difference. But then you get into things that are also important beyond social isolation, like medication compliance. I mean, the Eloque model will allow a family to load it with data, so they can remind mom or dad to take their pills when they get up in the morning. It's just, there's all kinds of ways to use tools like that are really useful and appropriate.
Yeah, I saw one company called, I think it's called Replica, where you can go in and buy your AI thing and then kind of start talking to it and it gets to know you. I mean, how? Yeah. And then you can actually open up your phone and see it like hanging on the wall or something. I don't know, Ramsey, if that would be a. There's a creepy line somewhere that we're treading here. But Tom, what's the future of that? I mean, how much? Is it going to be a real person showing up in place in these house, which I think just brings, having gone through the same journey you did and Laura went through, yikes, having a real person into a house you don't know, you can't vet, don't know what they're doing. Yeah. Yes, it'd be nice, but it's hard versus doing something digitally. I mean, where are we on that continuum?
At the end of the day, I mean, when people need custodial care, they need custodial care, right? They need aides to come in and help them put meals together, help them with mobility issues. So there's no replacement opportunity. I think there's a tremendous sort of supplemental opportunity. And a lot of it is just, it's communicating, it's alerts, it's medication compliance. It's, most people, when they move into functional decline, they don't need that much time initially. I mean, if you look at sort of what happens to someone when they're 80 and they start to have functional decline, they might just need a couple hours a day, 5 days a week. I mean, we see that all the time as people make their plans with Wealthy. It's just mom needs somebody to come in the morning and someone to come in the evening. But typically when that happens, it goes down. I mean, the trajectory is never up. So people need more time over time. But what models like Eloque do is they keep people engaged. They focus on medication compliance, and they're able to alert the family if, in fact, there's an event between those custodial care visits, in my example. So I don't think they ultimately replace, but I think they're terrific supplements in many different ways.
So I've got a question about sort of your target audience. So obviously there's the people that are being cared for, but there's also the caregivers, so the younger folks in the family that are that often sort of pick up the slack to help out their parents. Like, who do you think is your primary target between those two?
It's the caregiver. It's someone who's heading into retirement. It's honestly, it's long before you have functional decline. It's someone who is 60 years old. They have $1 million in total worth. Included in that is their house, which is paid for. That might be worth $200,000. So in my example, they have $800,000 in liquid assets. They're feeling pretty good about heading into retirement, but they've got this massive blind spot, which is by the time they're 80 and they need support, their liquid assets are gone. They still have Social Security, they still have Medicare, but they don't have any money left. That's our target audience, is that 60-year-old in that sort of economic condition heading towards retirement.
So you're describing a segment that is pretty much kind of who a lot of the listeners are selling annuities or doing retirement plans for today. Do you see your product as the start of the conversation that leads to the broader retirement plan, or do you see that this you're sort of a piece of that retirement plan that I'm.
Yeah. It's a great question, Paul. I think it's a piece of. I don't think you lead with sort of long-term care because, most people don't expect, even though, again, from an actuarial standpoint, the vast majority of us will need support. But I think you lead with income and you follow with sort of long-term care and to me, there's, to your point, there's tremendous correlation between the population that's buying annuities because they're worried about running out of income when they get old with the population that would buy a product like Home Life Secure or Home Care Secure. I mean, that's the exact same demographic.
So it's fun to do something new and original, okay? But if I use the record store analogy, which doesn't even doesn't even really apply anymore. You walk in and say, okay, this is a real, I'll make myself sound even older than I am. Bob Dylan was in the folk section. Now, where do we put him? When he starts to sing something new. Okay, there's no. And I think about the tools a lot of our agents use for quotes, right? Like, well, go to life quotes. I'm going to go to my life illustration quote. I'm going to go to my annuity. How do you break into it? How do you break into a space like this where it's not quite? There's not a way to slot this thing in easily into the systems a lot of the advisors are using.
Yeah, I will say this. I think, one, we are selling policies in 48 states. So there's evidence of sales. We're still in startup mode, but there's there's evidence of sales. I think more importantly, it's the way these large brokerage chains have reacted to this space to say there's a need. So if I look at whether it's a long-term care seller or a Medicare seller or an affinity group or employer platform, they all recognize this as a need. And I think the marketing of this is to say, hey, it's more than insurance. We're going to provide you with all kinds of planning tools and support through the course of your retirement. And if you need the insurance, it's there for you. And again, it's this idea that 70% of us will. And then there are different flavors. I go back to if you want something that's very inexpensive, you buy the indemnity product. If you want something, and people buy life insurance all the time as they head into retirement, right? They lose their group coverage. They're moving into retirement, so they buy some form of whole life policy. Home Life Secure is a whole life policy. If you never tap the accelerated benefits, then your estate gets a payout. So I don't think it's a difficult sale, given the sort of the platforms that both of these products are on and the price points.
Tom, what's one piece of advice you'd give a startup or a founder looking to break into a new space?
I would say focus first on the problem. Really understand the population, and the data points that exist to kind of support your development efforts. And then second, yes, for one, but just be terrifically careful and persistent as you design.
Ramsey, what do you think? I mean, we've had you actually raised a real interesting question, which is who's this for and who uses it and when it? I mean, you're selling something far out in advance. I mean, how would you sort of split this into landscape of retirement issues that advisors should think through? Is this top, middle,
so I think that
end? Yeah.
I mean, I think it's very important. And one of the things that Tom said that, early on in the discussion was that this can be an event that typically happens sort of towards the end of life, if things work out as planned, that can be meaningfully impactful. And we talk about personal experiences. So I've had relatives who saved assiduously their entire lives, and then and really through a fairly lengthy retirement, but then it only took a year or two to sort of wipe out all their savings, because they ended up going into a nursing home. So it's something that it's something that's not always entirely understood until you actually you actually experience it. So that's why I think I think it's a topic that financial advisors should incorporate into their in their discussion about sort of the arc of retirement. And then the other piece, I think this is important. That's why I asked the question earlier, Tom, about who the target audience is. I think it's certainly it's a combination. Like sometimes it's the particular beneficiary, often it's family. They all play a role, and it's different from one family to the next. We spent a lot of time on this show talking about the sandwich generation. We've had a few different guests come on and talk about that, and I think for a lot of people that are in that place where they're still late in their career and they've got kids and they've got parents, that this is an important consideration. Yeah. So, I think this is a critical issue, and I think that it's worthwhile to focus from the financial services industry.
Yeah, there's a data point out there that says that when a family member who's over age 50 leaves the workforce to care for a loved one who's basically in need and run out of money, that they forego $300,000 in their own retirement. So it becomes sort of a cycle for families too. And I'll also say right now to sort of the questions, our average buyer right now is 60. I mean, that's what we're seeing across both products. And we're seeing some outliers. We're seeing folks in their early 80s buy, and I think our youngest buyer is 23. So, but the average is 60. That's about the right time to really be moving in on a product like this.
Yeah. So I know you'll have a final question here for Tom.
Yeah, absolutely. It's one of my favorites. Tom, what is your why? Why do you wake up every morning and do this? Why are you so passionate?
Yeah, it's a great question. I had a personal experience. I mean, honestly, what I went through with my parents was chaos, and we had the economic means to figure it out, but we made so many mistakes. We probably institutionalized them too quickly, honestly. And so I think about this all the time. I just think about families that don't have the resources, that have to go through this chaos without either the funding or the objective support. And so that's, to me, it's just, I think about the 26 million families that reside in the middle right now at retirement. That's what drives me, and I think it's what drives my entire team.
Yeah. All right.
So I just want to jump in there really quickly. And I think something that is often underappreciated is that this is difficult even to the most sophisticated among us, right? So you were an insurance executive. I would say, financial advisors, even people that are in this profession, it is hard for them. So I think every consumer should feel well within their rights to feel like they need a hand on this, because it's hard for everybody.
100%. Yeah.
Yeah. Yeah. And you I also think it's a great conversation for advisors who are maybe RIAs who are looking at they've been managing the money of the client, but they've got kids who are older kids. This may be a great way to sort of create a relationship with sort of that next generation that keeps assets under management with a team. So
yeah, that's a great point. Yeah, and the final point I'll make on this theme is that nobody wants to burden their kids with this either. It's like, but it's what happens. If people don't communicate, if they don't have their documents together, if they don't have funding, then the kids have to step in, and that's a tough ending. Yeah.
Well, Tom, thanks for your time. Great to have you on our show for a couple of different reasons, as we mentioned. Where's the best way for people to learn more about HCG or reach out and get in touch with you?
Yeah, I think it's just hcgsecure.com, and we'd love to hear from folks.
Excellent. All right. Listen, Ramsey, thank you. Laura, thanks for coming back. And for all of the listeners, keep the feedback coming. Love the text, the messages on LinkedIn. We listen, and we try to get the people on. You say yes to us. So join us again next week for another episode of That Annuity Show. Thanks, everyone.
Thank you.
Thanks for listening. If you've enjoyed the show, please rate and recommend us on iTunes, Stitcher, Overcast, or wherever you get your podcasts. You can also get more information at thatannuityshow.com.